Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.9162 mark, and here on TradingView the market is down by 0.89%. and in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Polygon Matic chart. So Polygon Matic, from these low prices that he had been trading within, we saw a very nice impulsive movement taking us to an all-time high at around the $2.9 mark, in a movement that I'm terming as a higher Elliott wave count 1 to the upside. And after seeing that higher Elliott wave count 1, whatever we expect is a corrective structure in the formation of a higher Elliott wave count 2, which we have right here on the Polygon Matic chart, having this ABC corrective structure taking us back to around the $0.32 mark, in a movement that I'm terming as a higher Elliott wave count 2. And after seeing the low for that higher Elliott wave count 2, whatever we expect is an impulsive movement to the upside in the formation of a higher Elliott wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5, and sketching out a minimum target area to the upside in the formation of this wave 3 using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.61, which perfectly lies at around the $4.96 mark, and that is the minimum that I would expect that wave 3 to the upside to do before we see a wave 4, and then continue pushing even higher in the formation of that wave 5. And jumping to the 1 hour chart, to the 4 hour chart for further analysis, and also give you the short-term scenarios that can play out. Here on the 4 hour chart, you can see that I have this Elliott wave structure here in blue, which is a fractal wave within that higher Elliott wave count 3 that I have shown you on the daily chart that is in formation. And that is so because a wave 3 to the upside is an impulsive wave, and we also expect to see fractal waves in formation. And in formation of this Elliott wave structure here in blue, I believe we have completed the formation of that first wave, and because the first wave to the upside is also impulsive, we also expected to see fractal waves in formation within that first wave. And that impulsive nature in formation of that first wave is what I've represented over here in this Elliott wave structure in yellow, where I have the wave 5 completing the formation of that first wave. And after seeing the formation of that higher Elliott wave count 1, whatever we expect next is a bit of a retracement to the lower side in the formation of a higher Elliott wave count 2, which is a corrective wave. And that is what is going to give me my two short-term scenarios that I'm expecting to play out, because within the formation of a second wave we expect an ABC corrective structure, and that is what I want to base my analysis on. And there are two possible ways we can have our ABC corrective structure, and the very first one is having this as a massive wave A. Then we have seen the low for that wave A, and I'm expecting a bit of a bounce to the upside in the formation of that wave B before we continue pushing even low in the formation of that wave C to fully maximize the formation of this second wave, and sketching out a minimum target area to the upside in the formation of this wave B using a Fibonacci, connecting it from the high of that wave A to the low of the wave A. That gives me a minimum retracement area to the upside in the formation of that wave B between the fib level 0.618 and the fib level 0.5, and that perfectly lies between the $1.09 mark and the $1.03 mark, and that is the minimum that I'm expecting that wave B to the upside to do before we continue seeing an impulsive movement to the lower side in the formation of this wave C to fully maximize the formation of that second wave. And in the formation of that wave B, there are key areas of resistances that we need to manage to break above, and over here you can also see that we have been trading within this channel, and in case we manage to break out of the channel to the upside, there are chances of managing to break above the key area of resistance at around the $0.95 mark, and once that happens I'll be expecting a retest of that key area of resistance before we continue pushing even higher to fully maximize this red target area that I have sketched out in the formation of that wave B. And once that plays out, then we can expect an impulsive movement to the lower side in the formation of that wave C. And in case we see a breakout out of the channel to the lower side and continue pushing even lower, then that movement will be losing key areas on the Fibonacci's, and those key areas on the Fibonacci's are what are going to give me my second possible scenario. And if I connect the Fibonacci's, connecting them from the low down there to that high at around the $0.94 mark, my minimum retracement area in this movement right here for us to continue having this as a valid ABC corrective structure there are areas on the Fibonacci's that we need to continue holding above. That is the Fib level 0.382 and the Fib level 0.618, which perfectly lies between the $0.88 mark and the $0.83 mark. In case we lose that target area here on the Fibonacci, then my second scenario will be playing out, and we need to continue holding above this target area for us to say that we have this as our massive ABC corrective structure. In case we lose this target area down here and continue pushing lower to maybe the key area of support at around the $0.78 mark, then I'll be having a different ABC corrective structure over here, having this as my wave A. Then we saw a wave B making a peak at around the $1.17 mark. Then I'll be expecting a straight sell off over here in the formation of that wave C to fully maximize the formation of that second wave. So those are the two possible ways we can have that ABC corrective structure, and that is what is giving me my short-term scenario. We're in the formation of that higher Elliot wave count 2 before we see a bounce to the upside in the formation of that higher Elliot wave count 3 to the upside, and we need to continue holding above the key area of support at around the $0.88 mark and the $0.83 mark. Losing that target area, then we'll be having a straight sell-off in the formation of that ABC corrective structure to fully maximize the formation of that second wave. And also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we're trading at around the 54 mark, meaning we have massive room for us to support any movements to the upside and also to the lower side. Also taking a look at the MACD, here on the MACD we have printed a bullish cross, and that would mean higher prices are coming our way. You can also see we have an increase in the buying momentum, meaning higher prices are coming our way, and there are chances of fully maximizing this red target area at around the $1.09 mark and the $1.03 mark in the formation of that wave B before we continue pushing even lower in the formation of that wave C. And that is the update for Polygon Matic.